Hi everyone, let's go over my bullish and bearish Elliott Wave scenarios on Bitcoin, and also make sure to check the timestamps for same, updated or new, so you know what changed compared to the previous video. Starting with this zigzag to the downside, where we're looking for a wave A, B, C 535 zigzag, where the most common target for C is between the 1 and the 1.236 trend-based fib extension, taken from the high to the low to the high over here, where the high of wave B is nicely made on top of the 786, which is a common target for a wave B. This then gives us an area of interest for wave C between 41k and 40.3k, with the 1.618 being a less common target, but a target nonetheless at 39.2k. You can also see I have some support boxes to the downside here. First of all, the blue box, which we have hit over here. We have touched the weekly level at the high of the box, and at the lower end of the box we have a daily naked point of control at 41k, which is in very nice confluence with the 1-to-1 of the most common target area of wave C. So that is definitely an area of interest. And then around the 1.618 we have the yellow box over here just below, sitting between 38.6k and 39k. Now what is important here is that for this wave C, we did not yet hit the common target area, and it is very rare for a wave C to not hit this area over here. A minimum requirement usually for a wave C is taking the low of wave A, because a truncated wave C is incredibly rare, but we don't have to think about truncation because price did take the low of this wave A. However, we also have to look at the structure, and at the moment it looks very 3-wavy, while a wave C has to be a 5-wave structure. So if we then zoom in to this structure over here, then I have a couple of scenarios that are important for the weekend and the probabilities as well. Starting with this diagonal scenario here, where we're looking for an ending diagonal in a wave C. Now, important in an ending diagonal is that all the waves are zigzag structures and not impulse, zigzag, impulse, zigzag, impulse. You don't want to see impulses in 1, 3, and 5, and that is a bit of an issue in this particular scenario, because this move down looks very much like an impulse. This one also looks like an impulse. So it's definitely not the highest probability scenario here. Also, if this is your low of wave 1, there is overlap over here, which increases probabilities for a diagonal, because in a normal impulse, 1, 2, 3, 4, 5, you don't want to have overlap between wave 4 and wave 1. Now in this scenario, you can also see that wave 3 is longer than wave 1 because it passed the 1-to-1 trend-based fib extension, taken from the high to the low of 1 to the high of wave 2. And this also decreases the probabilities of a contracting diagonal. It does not invalidate a contracting diagonal. It's a guideline, not a rule, that wave 3 cannot be longer than wave 1. However, it does significantly lower the probabilities for a diagonal to the downside. So as you notice, the potential impulses in 1, 3 and then potentially a 5, the overlap between 1 and 4 and wave 3 being longer, are not really in favor of this particular scenario. The clear-cut invalidation is price moving above this high over here at 43.1k. A second scenario, which at the moment carries higher probability compared to at least the diagonal, is this scenario here, where we're still looking for the bigger ABC 5-wave move in wave C, but now we choose the low of wave 1, one higher pivot. Instead of this low, we now have the low of 1 over here. So this is now your wave 1 impulse, 1, 2 over here, 1, 2, 3, 4, 5. Then a flat structure in wave 2, 3 wave A, 3 wave B, 1, 2, 3, 4, 5 structure in a wave C. And then we have 3, 4, and eventually 5. Potentially your 3 ended here. Doesn't really matter, but we're looking for a 4 and a 5, where preferably overlap is not allowed in this particular scenario, because we actually don't want to get into that diagonal scenario, right? Based on what I've just explained as well. So in this scenario, with this low, there is no overlap yet, which means that here we could be looking for a wave 5 to the downside. And Stuba in Discord posted a nice scenario, which I think is interesting. It's very early to think about ending diagonals for a wave 5 and therefore ending C, but it is an interesting thought anyway. So he posted this scenario over here in Discord 1, 2, 3, 4, 5. I do think 4 is quite short compared to 2 at the moment, so potentially we continue ranging here for the weekend, but nonetheless a potential ending diagonal in wave C where we do not hit the invalidation, which is very nice. That's Tuba put the invalidation there, is very possible as well, as during the weekend quite often you get ranging structures, and a potential ending diagonal is definitely a ranging, slowly grinding structure to the downside to then once more reach this target area over here and potentially the daily naked point of control there as well. So it's definitely an interesting area, but keep in mind this level at 42,262 on my Coinbase chart, this low over here, because the moment this low is touched, the probabilities will increase for a double 1-2, I should actually say a triple 1-2, a bigger flat structure, or potentially bullish continuation. Now let's go through these one by one, starting with the impulse to the downside here, where we're then looking for 1-2, 1-2, 1-2, and then you get a big 3 to the downside. That is what we want to see, a very big high volume wave 3 to the downside, because it's going to be a wave 3 in white, over wave 3 in blue, over wave 3 in green. Now, I'm not too big of a fan of triple 1-2s over here on Now I'm not too big of a fan of triple 1-2s. They don't appear very often, and what I prefer to see in a triple 1-2 scenario is a 1-2, 1-2, 1-2, which then creates the look and feel of a diagonal, but instead it's multiple 1-2s, where the second wave 1 takes the low of the first and the third wave 1 takes the low of the second. But you can see that the blue one over here is actually higher, so that lowers the probabilities a little bit for this particular scenario. But in this case, preferably for your wave 2, you do want overlap with this wave 1, as you actually want price to move inside the 05 to 786 area, which is pretty much from this low over here, kinda only the 05 exactly is just below, but pretty much the 05 to anything above, of course. Also, it would be a retest of this white box, which acted as support before and can then act as resistance. Preferably, we also see some bigger bearish CVD divergences coming in to support this scenario to the downside, after which we want to see a big move down. Now, the invalidation is price also again taking this high. Now again, besides the 1-2 scenario, we also have to think about a potential flat in a wave B or a wave 2. So we then have a wave A, then we look for a flat in either a B or 2, and then we look for a C or a 3 to the downside. In this scenario, we have a corrective structure to the upside in A. This is now a confirmed corrective structure to the upside because the low is taken. This cannot be a 5-wave structure anymore, because then it wasn't allowed to take the low of A. So confirmed corrective structure and then a wave A. Then we have a 3-wave structure in a wave B, a wave A, B, and a wave C, which also ended at the common target area for a wave C. If you take it from the high to the low of A to the high of B over here, and I toggle on the zigzag target, then you can see the 1 to 1 to the 1.236 area over here has been touched nicely, acting as support. That's what you like to see for a 3-wave ABC. And then what you're going to be looking for is price to move to the upside impulsively, and then a 1-2 looking for a 3, 4, 5 towards the higher end of this range again, which also means passing this white box over here. If price can pass this white box, probabilities increase to then move to the upside to the higher end of the range, where we also have a daily over here at 43,474 on my Coinbase chart here, and the common target area for your wave is C for a regular flat in this case, because price is bouncing between the 1 and the 105 Fibonacci taken from the low to the high of A. Common target for a wave C in a regular flat is the 1 to the 1.236 taken from the low to the high of A to the low over here, which is between 43.5k and 44k. What is important, however, is the Fibonacci pool from the high of your bigger wave A in yellow to the low of your wave A, because currently price has hit the 786, which is a common target for both a potential wave 2 and then a 3 down, or for a potential B and then a wave C down. If price moves towards the upside and hits the 886, any move to the downside has a higher probability of being a wave C, and it's a lower probability of being a wave 3. So it will be important to see how far then price moves towards the upside. Again, we do have some resistance over here, right? And potentially one can swing failure the low, but actually you don't really want the 886 to be hit if you're someone that is going to be looking for much lower prices, right? So that is an important detail in case price does move towards the upside. Now we do have some bullish CVD divergences here at the low, higher low in price, lower low on the CVD, which you can see over here on the 15-minute chart. We have higher low on CVD, we have a lower low on both blue and yellow bullish CVD divergences. Also keep an eye on what is happening locally here, because you can see price is moving up, 2 candle retracement, but look how far yellow moved towards the downside, creating a 5-minute bullish CVD divergences here. Higher low in price, lower low on the CVD. There's absorption going on of market short positions, which supports a move to the upside. Now, if price takes these highs over here, the CVD divergences have played out and are again neutralized, but you can also see those highs are very, very close to this horizontal line, right? So keep an eye on that particular line. It does increase the probabilities to actually move towards the upside, but generally when we look at the probabilities here, the probabilities would still suggest on the micro that we are looking for at least one more low to come, right? Even either in the wave C scenario or a potential flat scenario, but for one more low to come, for price to take this low here. If price hits the line, the important line over here, then the probabilities increase for a 1112, a flat or bullish continuation. And that just depends on how price then moves towards the upside if we could get continuation, but it is not preferred at the moment to see continuation because of the wave C target area not being hit. So here I also wrote, not too big of a fan of the 1112. It's quite a rare pattern, and also it's not the shape of a diagonal, which usually is preferred. Also not too big of a fan of bullish continuation, as the common target area for your wave C is not yet hit down here. We did hit the weekly, nice support, right? All good, all fine. But the common target area isn't yet hit, but the minimum requirements are passed. And for a flat, well, I prefer to wait and see more info. Let's first see if price can hit this level and then flip this resistance into potential support, and then we will take it from there, right? As long as this level over here is not reached, generally the probabilities are higher for a potential normal C to the downside, but we do have bullish CVD. So yeah, keep an eye on that, plays out if price takes the high. I hope this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use in my opinion, which is the CVD. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.